Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
The longer we have uncertainty, the more bearish the outlook. So the longer, again, we have uncertainty, the more bearish the outlook. And we definitely have a lot of uncertainty. All right, dollars digesting. This is still sideways, but big picture lower. Gold has finished out the quarter. And as I mentioned, we had the largest pullback in the Qs since Q2 2022, more than 5%, only happened 10 times in history. We definitely had a big advance in gold, 38-year high. We definitely have that chop that's going on right here with the markets. And the most important, I believe, measurement is this 10-year. Right now, we just dumped below 4.2. So if you can see this, bonds are bid, gold is bid, defense is bid, and gold could undergo absolutely some profit taking. There are some shenanigans that I don't understand, so I'm not going to speak to in the physical market, but folks that I follow closely are watching, and they're really impressed that there is a lot of physical possession and physical delivery movement, not just speculation. So this is different. Usually it's a speculator's market. Gold and silver bugs are a little bit woohoo, but anyway, there's actually a lot of physical delivery going on. So we got to keep that in mind, but it can undergo some profit taking now that the quarter is ended. And you know, my warning yesterday is 4.2 really has to hold. And right now bonds are way too strong with yen while dollar digests. And this was a really nice tell of weakness. And then we kind of popped back up yesterday intraday, and we are just slogging about. But I think I gave you my upside targets anyway for SPX to gap fill at 56.8835 on any good news. Otherwise, we have the longer we have uncertainty, the more bearish the outlook big picture. And you've also seen, and I've reviewed over and over again, that I see this as a big top. This is my VIX spread 3-month to spot. It is in backwardation. So yesterday we were in backwardation, but it didn't stick. So this is important because it has to actually stay below. And the reason I always look at this is just for reminders. Sometimes it can create this reflexive, actually no, it's convexity short covering, but I don't think we're there yet. We really do need a macro trigger for that. Here we just had massive puts that were monetized when VIX hit 65. So vol sellers were in control. This was December 3rd. We had a 3% drawdown exactly on Q. It was perfect short. Anyway, the point is that was also reflexive short covering. This backwardation actually put on 8.5% once it triggered. SPY dropped 8.5% for a total of 10%. So all the time it was dropping in this zone, it still wasn't danger Will Robinson until this went into backwardation. So I really do watch this very closely. And that means we are not out of the woods. So that's why I keep saying the longer we have uncertainty, the more bearish the outlook is. That this particular ratio says we are not out of the woods. And this is the one that I'm watching the most because this is the pattern of an H that would be very impactful. If we take out the 200-day, we could actually crash from oversold. So that's the kind of stuff that I look for. It's not the usual. You know that. It's not what my baseline bet. When we got back inside this wedge, I'm like, okay, that's busted. And it has continued to really help time. Remember, I used to say trounce and bounce, bounce and trounce, because I could read this stuff. So this is very important. If we start to roll over and break the 200 a day, we're going to have bigger issues. VVIX was a fabulous tell with that Bollinger Band tag. On Monday, it stopped going down on as literally that Bollinger Band tag. And that was a fabulous tell. Market was going to get some shake and bake. And then yesterday it turned red because SPY went down to that 5,500, actually broke it, but then was hanging on. I said this, it's hanging on by its fingernails like Humpty Dumpty, but I don't think today is the day it's going to fall off the wall. And we clawed back up. So where did VVIX come back down to? Support. That's it. All it did was come back down to support. So you got to break 100 decisively on VVIX for this market to move higher. And that's not what it wants to do. Look at that. It's working that too. Look at all the moving averages it's trying to get above. Look at the trend line. It got above once, came back in. It's saying, hey, I want to try that again. So VVIX is still very much bid. But that's another reason I say the longer we have uncertainty, the more bearish the outlook becomes. So this is VIX also doing its thing. It did not close below the 10-week. It got back above 1950. And then we have follow through this week. there's nothing here to kind of get in its way, but I would say 25.20 on a daily. We didn't reach that yesterday. We reached an intraday high of 24 and came back in. Literally, like any other stock, it softened and came back and did a gap fill, and that's support. So now it needs to break and roll back over. Market gets below 1929, we're back in business for the SPX higher. We're not in the mode right now. We're right in the mode of more uncertainty equals more hedging. I did some gold miner analysis, which shows it's still in trend. My only warning this morning is that be careful because it is so extended. And I mean extended, here's the mean. So this is extended. It can undergo some short-term profit taking. Now back here was very much Trump. I warned literally here at resistance, be careful. The move can go into Bitcoin and out of gold. And sure enough, that really happened. But then remember what happened? It also right here, beautiful. It got right back up, right? That was okay, it's done. And now it started moving strongly higher. One shake and bake, which was the fact that it was very extended, didn't break down. Now we're right up to the next price target of fib level anyway, because I have no other way when we're in blue skies to create price targets. That is it. Remember, that was 100%. This is the 161 level. It digested very quickly at that 161, but then went right back up in play. So yeah, this is definitely getting exhausted. You can see it. Why? It's a gap up. This was a gap up, and it was a gorgeous, see that pink line? That was a gorgeous gap up. Go! This is extended. This isn't coming from a base of a gap up, which is absolutely gorgeous. This is like buying capitulation worry area. So I would say use this as your level for GLD and your miners. We come back inside 284.64. We have a likelihood to do another little shake and bake because it's extended. So that would be your channel right here. So right now it's going parabolic. Literally, it's crazy. Physical market, crazy. Silver too. Miners are obviously going along for the ride. Silver's not as excited, but it's still bullish. You got GDX also. Look at three weeks just firmly above the all-time high. So gold is leading. So why I'm saying GDX might look fabulous, and it still is fabulous. Follow this. GLD comes back down, breaks 284.64. You will have shake and bake in your miners. Shake and bake means profit taking. We need a bullish bent. Sell the rumor, buy the news might be it. Option flow above that gap fill that I gave earlier this morning, 56.88, might be it. But big picture, look at the selling. Like this is rolling over. This is not buying. This is not even oversold enough to buy. So we're still really in the thick of junk. It's just a junky backdrop. So here's your December breadth breakdown. We had a little bounce from January 13th, and then we had the Wednesday 219, February 19th when I warned again, right? And we dumped. Look at this. This is like pathetic. So this is all we got. We got a little bit above here, but look how this is falling. So this to me says we're more likely to roll over again, but I don't have anything conclusive, nothing yet, but we don't have anything converging that's bullish is what I want to say. This is red. Market got rejected at the channel. This is breadth, by the way, and we came right back down. So I'm not seeing the same backdrop like we had before where we were bouncing. We'd already turned green on the channel, and then this turned up. That was just much more productive for a bounce. This doesn't look productive for a bounce. So, and this is a NASDAQ 100 where I said, hey, be careful. We break this channel that we've had in place literally since the August low, and that's exactly what's happening. We've rolled over and there's nothing here. So when I say we can crash from oversold, I mean we can crash from oversold. All right, so we busted that channel. We completely busted that channel. What was the high right here? On February 19th, literally when I warned. Ironic, isn't it? But look at this. Look at this. February 19th, price was way the heck up here, and I said nope. And also right here, look at that, right before the December 2nd when I warned. So the first round of December 2nd produced great shorts. And then the second round of warning on February 19th produced great shorts. The only reason we bounced was because Trump came out on a Sunday night and said he might relax tariffs, and the market bought it, but not anymore. It's kind of like dangerous. It's kind of like dangerous. So long bonds on higher credit spreads in a nutshell. And as yield curve flattens, bonds are bid with gold, right, on uncertainty and tariff terrors. And then, of course, we have uncertainty. The longer it's around, it creates much more bearish outlook. And then we've got yield curve flattening with credit spreads widening. Do you want to hold bonds short against that? All right. So repeat is basically the quarter's done. The quarter is done, and we are holding on to 5,500 like literally the guy on the wall, Humpty Dumpty. And if we hold, we could definitely make it up to that kind of 56.70 resistance. 56.90 would be intraday, but nothing about this is very bullish until or unless we could get back above 57.83, and that's not really where I'm leaning. This is still weakness on advanced decline, cumulative volume, breadth, although breadth is trying to diverge. It doesn't fool me. So anyway, long story short, this is a market that has kind of like dangerous, because markets can crash from oversold. We are, by the way, technically oversold. We could also bounce and it could get going, but I'm not seeing any really visible signs of that. Even though tomorrow could get delayed and market has absorbed a lot of weakness, it to me is just the longer we have uncertainty, the more bearish the outlook, period.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.